Discover 5 little-known investment opportunities. Wall Street experts forecast 4.5% stock market gains in 2022, ending a historic 2-year bull market. If you know where to look, you may make money on your investments without stocks. So, in this video, I'll explain why every investor needs alternative investments and how to circumvent the government's ban on this market. I'll show you how to locate the finest alternative investments and then disclose 5 you never knew existed. But before we begin, click the like button and subscribe. Also, ring the bell icon so you'll never miss our new videos. Alternative investments may be most essential in 2022. Following nearly a year of straight-up stock prices, we had 2 corrections of more than 5% in the final 3 months of last year, and expectations for this year are poor. Stock volatility is back, but adding alternative investments to your portfolio can boost profits and minimize risks because alternative investments have distinct traits. These investments don't follow the market. Barrett Financial discovered that 20% of alternative investments reduced volatility and enhanced returns. The first chart illustrates portfolio standard deviation across 5, 10, and 20 years. Standard deviation measures investment risk by showing how much a portfolio or investment rises or falls each year. The blue bars indicate the normal stocks and bonds portfolio, with a little over half in equities and the remainder in bond funds. Look at the brown bars. What happens when you invest around 20% of your money in alternative investments along with equities and bonds? It reduced portfolio risk every time. Again, that's because alternative asset values don't track equities and bonds. In reality, inflation, one of the major market challenges this year, may boost alternative assets and these investments. But risk and return are 2 sides of this, and adding some alternative investments achieves something absolutely wonderful. While investing, we frequently discuss the risk-return trade-off. More returns require more risk. Alternative investments can minimize risk and boost profit. We're back to Bear's research and the blue bars of the classic stock bond portfolio's performance. Look at the brown bar when we add alternative investments. We reduced portfolio risk and maintained return over 5 years. Even on lesser risk, you would have seen that return grow in the other 2 periods. I'll show you how to identify the greatest alternative investments and circumvent government regulations later. Today's video is with Fininvest, which makes wine investing accessible. My favorite alternative investment is wine, which we'll discuss later. Fininvest makes it easy to invest without becoming a wine expert or spending tens of thousands on wine storage. Start with $1,000 in minutes. Wine has outpaced stocks with a 13.6% average return over 15 years. The platform starting program picks verified, excellent condition wines for novices. Higher tier programs provide lesser fees, uncommon wines, and professional portfolio reviews. Fininvest's size allows it to access and discount fine wines that only the top 1% can buy, and expert sommeliers select wines for their investment worth. Insured wine cellars preserve your wine. Wine can be sold or sent to you at any moment. No other alternative investment or stock lets you spend or drink your profits. Carbon credits are our first alternative investment. EU, California, and Northeast US carbon credits are quotas. These credits allow utilities and industries to pollute annually. If they come in under that level, they can sell those credits to industries that need more and have discharged more pollution than allowed. Companies must become more efficient and pollute less if governments reduce loan amounts. Fewer firms mean higher credit prices. If carbon credit prices dropped, polluting industries could buy more rather than become more efficient, so these investments had implicit government support. Because of the fantastic return, you don't have to be a hippie to adore these assets. The government wants them to rise. 2 actively traded funds buy these credits. CraneShares Global Carbon Strategy ETF, KRBN, has gained 101% since July 2020. The fund invests 2/3 of its assets in the EU market and tracks carbon prices in California and the northeastern US. The other one, the iPath Series B Carbon ETN, ticker GRN, started in 2019 and was up 129% last year with assets largely in the EU credit market. Wine investing, either directly or through Fininvest, is a multifaceted venture. Fine wines have outperformed stocks by 13% annually over the last 20 years, and you get much more than just that price return. You can enjoy a work of art, but not like this learning about wine areas and their best years. This goes beyond an investment return, yet wine investing, like art, is expensive. A $20 bottle of wine must be stored at the appropriate temperature and humidity. You'll also need to insure your wine investments against damage or theft, which is why Vininvest's annual charge of 2.25 to 2.85% doesn't seem so high when you realize that it properly stores and insures your wine. Expert pricing, portfolio reviews, and rare wines are included in storage and insurance. 3 alternative investments remain. Brilliant ideas with double-digit return potential, but the government won't let you invest. The Securities Act of 1933 prohibits most investors from making alternative investments. The SEC restricts alternative investments like private equity, hedge funds, and the ones we're discussing today to authorized investors with over $1 million in net worth. By getting around this rule, people on Main Street can still invest in the same things as the rich. Vininvest, Seedinvest, and other sites like them make alternative investments available to everyone by lowering the minimum investment amount and putting all the information in one place. Fine art is another low-correlation alternative investment. I'm not discussing the new NFT market because I don't understand it. Yet, the traditional fine art market has returned 13% yearly since 1995 and 7.5% annually over 35 years. The bottom chart shows that art values move oppositely to stock prices. Your art investment will offset stock market downturns and yield a profit. Stocks fall, but your wealth doesn't. Like any alternative investment, it pays to know it. Since 1985, Impressionist art has returned 5%, while modern art has returned 7.5%. Yet, alternative investments have other advantages. You obtain a good return and learn about a new asset class, so you get more than a stock certificate. Inflation might boost our 4th alternative investment, commodities. We're talking about futures-traded commodities like metals, energy, and agricultural items. Commodities, like our alternative investments, are actual assets. They are tangible, unlike stocks and bonds, which are simply bookkeeping concepts. Even if the dollar loses purchasing power, these actual assets will retain their worth. As inflation rises, gold and oil retain their value. Certain commodities tend to appreciate as the dollar falls. Commodities ETFs like the Invesco DB Commodity Tracking Fund demonstrate that, ticker, DBC. The fund has futures contracts in 14 of the most traded and important commodities, including gasoline, oil, gold, corn, and copper. Over the past year, the fund's shares have risen 40%, providing a hedge against inflation's multi-decade highs and a decent return. Next is a favorite investing idea. I also wanted to show you what to look for in alternative investments to assist you choose one for your portfolio. They aren't stocks, therefore you can't use the PE ratio or other fundamentals like we do on the channel. Alternatives change everything. First is easy, find the asset's return history, especially the longer-term history. I've demonstrated you that in these 5 alt investments, but you'll find many more. Utilize that average yearly return and these elements to ensure your investment returns. The investment's association with stocks is also crucial. This shows whether a different investment will make stock market crashes less severe or worse. As shown in the 2 charts, investing in assets that aren't associated with stocks increases return and lowers risk. Secondly, check the fees. Are there annual management fees and buy-sell fees? Alternative investments generally cost more than stocks, but you don't have to pay too much. Compare platform costs to find the best price. Is the investment fun? These are wonderful chances to obtain more from your investments than just money. Picassos and good wines have value because they provide you something stock cannot. I couldn't discuss alternative investments without mentioning real estate, one of the oldest. There are so many ways to earn from real estate, from Airbnb to traditional rentals to commercial space to real estate investment trusts, that it's hard to talk about it as a single investment. Everyone can invest. Real estate's rate of return is as varied as its investment potential. The National Association of REITs reports annualized returns ranging from 4% to 15% on several property categories over nearly 3 decades until 2020. Real estate also protects you from inflation, and most studies show that it has a negative correlation with stocks. This makes your portfolio more stable. These alternative investments are great since you can invest in several. Learning about each can be as interesting as watching your portfolio expand. Vininvest can boost your profitability. We'll be giving you more videos like this. And if you like this video, don't forget to share, hit the like button and subscribe. Thanks for watching, and see you at the next one.